and welcome to episode 95 of Money, the investing and economics show for millennials by a millennial, where our goal is to educate, entertain, and increase the financial literacy for a whole new generation of investors. I am, of course, the one and only host of the show, MC Mo. Now let's get to the money. When it comes to investing in the stock market, there are a lot of things that can work against you. A crash in the market, a trade war, inflation, massive fraud by a company whose stock that you own, but the largest thing you have working against you can be yourself. You are your own worst enemy, as the saying goes. You are going to make mistakes when it comes to investing, not only in the beginning, but throughout your journey. Even the Buffetts and the icons of investing have made mistakes, even when they were seasoned veterans. So in this episode, we are going to discuss 5 common mistakes to avoid as an investor. The first mistake that people make is not having a plan. I mean, technically, if you don't have a plan, you can never make a mistake because there's no goal. It's like walking around aimlessly. You can never be lost because you're not going anywhere. Same with investing. Whether it's retirement, a first home, paying for your kids' college, whatever the reason may be, you need to have a number, a goal, a reason. Here's how much I need. Here's what I need to save each month. These are the annual returns I need for that goal. These are the ETFs that could help me get that return. Here's what I'm willing to lose on investment. Here's the worst case scenario. These are all questions that you need to answer in your plan. Write down that plan. Shouldn't take more than a page. And once you have it, then you're ready to start investing. The second common mistake that investors make is confusing historical returns with future expectations. This can happen in many regards. For instance, you're looking at mutual funds to buy and see over the past 5 years, it's returned 20%. That's impressive. So you buy it, but that does not mean that you can expect 20% returns guaranteed for the next 5-10 years. Or you're buying a stock like Tesla. If you bought in 2013 and held for 5 years, you'd be up almost 900%, which again is amazing, but that cannot last forever. In the past year, it's down more than 40%. Sure, it may rebound, but you can't say, well, it went up 50% or 900% in 5 years. It'll do it again. Things change and companies change. The point is, do not fall in love with a stock. Don't look at your portfolio with rose-tinted glasses, and don't fall into the routine of confirmation bias, where you search only positive information about your stocks when they're doing poorly and ignore all the bad information because you refuse to be wrong. The third goes right along with what I was just saying. The third mistake is overconfidence. Making money in the stock market is a great feeling, and when you have a few winners, it begins to feel like, hey, this is so easy. You can't be stopped. When it rains, it pours, and somebody better build an ark because the weather forecast is calling for a big downpour in my portfolio. The type of overconfidence always leads to one thing: more risk. You start seeking out bigger returns, and we all know big risk means big reward. You're swinging for the fences, saying, I've been outperforming the market. If I keep this up, I could retire at 55 instead of 65. I'm not going to give you any ideas. The charlatans, hucksters, and furus of the world show you all those, promising big returns. Just know Wall Street's history is filled with stories of Icaruses, golden boys who lost their shine, riches to rags. If you're not disciplined, your fate will be the same as theirs. The next lesson is kind of the opposite of overconfidence. The mistake is holding on to your losers. The problem is nobody wants to admit that they picked a loser, the same way a boss will hesitate to fire someone they hired because they don't want to look like they made an error in judgment. You start making excuses. It certainly is not your fault. You did the research. The company is great. It's the lies, the negative stories, it's the market, it's this, it's that. So you start doubling down, buying more shares, saying it'll come back. Then you're sitting on a 40% loss. Just know if you lose 40%, it'll take a 66% return just to break even. Buffett always suggests selling your losers quick. If a stock is down 10%, yes, it may come back, but there are better investments out there in the meantime. The fifth and final lesson is probably one of the most common: trying to time the market. You hear it all the time.
I'm not ready to invest right now. The market just doesn't seem right.
I've said it, and so have thousands of others. It's impossible to time the market. The biggest mistake you can make is not investing consistently. If you're holding on to cash in your account and it's not in the market, you're missing out on opportunities for that money to be making more money. 2 episodes ago, episode 93, we discussed Bad Luck Brian, the worst market timer ever. He missed out on hundreds of thousands of dollars by trying to time the market. Yes, he came out all right in the end, but not as well as he could have. Bottom line, there's that saying in the Little Giants movie, football is 80% mental, 40% physical. Well, investing is 120% mental. It's all a mental game, and it takes discipline. Of course, mental mistakes are going to be made, but you have 30, 40 years to train your mind to know what is the right course of action. It can be grueling. The upswings and downswings in a single month can be nerve-wracking, but it is important to always see the big picture. Don't stand too close to the elephant, they say. Take a step back and say, okay, things are a little bit crazy right now, but long term, how am I holding up? Am I on track? Okay, I'm good. I can weather the storm. Or I'm not on track. Okay, let me make these adjustments. Do not get rattled and pull out of the market and think, this just isn't for me. It is for you. It's for everybody. Everybody deserves to retire and live a comfortable life and enjoy their golden years. Thank you so much for watching another episode. You can find new and classic episodes of Mo Money right here on YouTube. For now, don't forget to like, comment, subscribe, share. Follow me on Twitter. Follow me on Instagram. Like me on Facebook.
Mo Money signing out.